Hi everybody, I'm a psychic. I know what you're thinking right now. You're thinking, what is this guy going to try to sell me and how much is it going to cost? See, I told you I was good. This is Alphonse Anacrelco coming to you from our Patella Financial offices in Melville, New York. I'm glad you're with us. I want to know if you have a 401k, 403b, or some other kind of retirement account. I'm betting that you do. If you do, you're invested in mutual funds. Those mutual funds, of course, are nothing more than a basket of stocks. So like it or not, whether you know it or not, you're invested in the stock market. So, let me ask you this. The market crashed in 2007 and going into 2008. Did you get a call from your financial planner telling you what to do? I'm guessing you didn't. Why not? That's something that I'll answer for you at a later time. But let me tell you this. Some of you may be thinking, well, it was a buy and hold strategy. I bought, I held, the market came back, and I'm just about back to even. And maybe you're happy about that. Maybe your financial planner is telling you you should be happy about that. You should not be happy about that. You might be back to even. My guess is you're just a little bit short of where you were at the peak in 2007. But you lost 4 years. The market started to come back in 2008. This is 2012. You lost 4 years. Your money was invested for 4 years, and you're back to even. That's not something to be happy about. So let me ask you this. Can another crash happen? Of course it can. What are you going to do about it? Can you afford not to know what to do about it? Well, I'm here to sell you education. I don't think you can afford to not know what to do about it. And I can show you what to do. What are my qualifications? Well, first of all, I'm a very successful stock investor to begin with. I've been investing since 1975. I'm also a professional educator. I made a career of it. I was very happy to make a career of it. So this is a pretty unique combination. You have somebody who was in education, you have somebody who's in the stock market, is willing to help you learn what to do about the stock market. So, there's the answer to the first part of that question. What am I here to sell you? I'm here to sell you education. I'm going to offer you a course. It's 12 to 15 hours, depending on how fast the students in the class absorb the material. It's on the stock market. I will allow you to take the course twice within a year. You can bring a spouse both times. You'll get coaching for a year by email and phone. Some of you that are in my geographic area may get some coaching one-on-one and in person. I enjoy doing that. I hope you'll be available for it. You will also be able to qualify for a 105% money-back guarantee. Let me talk to you about that for a little bit. Suppose I told you that I was going to invite you to play a round of golf with me and Tiger Woods at Augusta National. Would you like that? I'm guessing you would. An awful lot of people are into golf. If you are, you certainly would want to play at Augusta National. If you don't like Tiger Woods, then interject the name of your favorite player. But you might say to me, well, I don't really know how to play golf, or I've played and I shoot in the hundreds. I'm nearly a scratch golfer. There's a lot I can teach you about golf too. So I say to you, well, don't worry, I'll teach you what you need to know. And we go out to a practice facility and I give you 12 to 15 hours of golf instruction. Now let me ask you this. What are you going to do at the end of that instruction? I hope you just said to yourself, practice. That is the right answer. Before you go to Augusta National with Tiger Woods or whoever it is that you like, you want to practice. You don't want to make a fool of yourself. Well, in the stock market, you need to practice also because you only have so much money to invest. And if you lose it all, you can only lose it once. And then you're done. We don't want that to happen. I'm going to show you how to practice to make sure you've learned the techniques properly, that you can apply them properly, and that you're probably going to do well. How do you probably do well? Well, think about playing 21 in Las Vegas and counting cards. What we want to do is stack the odds in your favor. You can never really be guaranteed that you're going to have a winning trade, but you can stack the odds in your favor. And that's exactly what we want to do. So how much is this all going to cost? It's going to cost a one-time fee of $2,975. Now, let me ask you this. Would it have been worth $3,000 to you to know what to do during the last market crash? Most of you probably said yes. An awful lot of you lost money in the market during that crash, or at least the value of your account went down. You think you're back to even so that you didn't lose any money. That's not really true because of all the time you lost. But let's take that up during class. Would it be worth $3,000 to you to know what to do during the next crash? Know what to do during the next crash. I can show you. Let's start with a free lesson. Let's talk about mutual funds. That's probably where you're invested right now. Mutual funds, whether you know it or not, have some big fees. I'm going to challenge you to call your financial planner or whatever company is managing your 401k, your 403b, or your IRA, and ask them to disclose all of the fees associated with your account. I think you'll be surprised. Another thing about mutual funds, you generally cannot get in or out very quickly. So if there were, let's say, some catastrophic news, and you decided you wanted to get out of the stock market right now, you might not be able to. It may take up to 3 days to execute a trade in your account. In the 403b that I had, it took 1 day. I was not guaranteed of executing a trade the same day I wanted to execute it. It was probably going to take 1 day. Sometimes that's just too late. So, what should you do? In our course, we're going to teach you about ETFs. What's an ETF? It's an exchange-traded fund. It's basically a mutual fund that's traded on a stock exchange. You can get in very quickly, you can get out very quickly, and the fees are very small. Next thing I want to warn you about. You may be bombarded, you may have already been bombarded with ads talking to you about some miracle systems. Systems that are guaranteed 80% winning trades. Systems that claim they'll get you 350% annual return on your money. Blah, 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 on it goes. I'm going to advise you to be very leery of those systems. Think about it. If you had one of those systems, suppose you developed it, you're a really bright guy, really bright girl, and you invented a stock trading system that was guaranteed these miraculous results. You would pretty much have a few options what to do with that system. One, you could keep it to yourself so that only you would have it. Two, you could share it with the rest of the world for $300, like some of these people claim to do. Or three, you could sell it to Goldman Sachs, cash out right away, and make a ton of money. I think Goldman Sachs would be interested in your system that guaranteed 80% winning trades. Which one would you do? I'll tell you what I would not do if it were me. I would not sell it to anybody that wanted it for $300, or whatever the number is. It just doesn't make sense that somebody would have a system like this and want to sell it to you for prices that seem to be so cheap. Please stay away from those. The only solution is education. The only thing to do is for you to know what to do for yourself. You're the only one that cares about your money. You're the only one that'll take an active interest in it. You have to know your risk tolerance. You have to know what to do with your money. Let me show you how. Let's talk about risk management. First objective of any investor has to be risk management. You have to avoid losing money. You have to avoid the big losers. If you enter the stock market, here are your possibilities. There are 5 of them. You can have a big loss. You can have a small loss. You can break even. You can have a small gain. You can have a large gain. What we want to do is, for starters, teach you how to avoid the big loss. We want to teach you how to avoid the thing that happened between 2007 and 2008. If you could do that, you're well on your way. Because now out of the 4 possibilities, breaking even really isn't so bad. The small loss will be mitigated by the small gain, and that leaves you with the occasional big gain, and you probably will do okay. So, we need to teach you how to compute risk. There's a way to do that. We need to teach you how to compute your possible reward if the stock moves in your direction. We can do that too. And here's what we want to do. We want to teach you how to enter a trade when the amount you might win, if you win, is twice what you might lose if you lose. If you buy a stock, there are 3 things it might do. It might go up, might go down, might go sideways. Going sideways is a break-even proposition. If it goes up, good for you. If it goes down, again, we want to eliminate the large loss and leave you with only a possible small loss. Well, if you know how much the stock is likely to go up if it goes up, and you know how much it's likely to go down if it goes down, and when to get out, and we can get you to have a reward ratio, reward to risk, of 2 to 1. That means that if you're only right 1/3 of the time, you'll break even. If we can get you with a 3 to 1 reward ratio, that means you only have to be right once out of 4 to break even. Now if we can get you to 4 to 1, you only have to be right once out of 5 to break even. We will teach you how to do these things, and the way we do it is through some terms called support and resistance. You may have heard these. There are many forms of support, many forms of resistance. I can't possibly talk to you about all of them here. We'll talk about one. Let's define the terms. Support is a price at which the stock is likely to go up. Resistance is a price at which the stock is likely to go down. So, how do you compute support and resistance? Well, there are places where the stock price turned around and changed direction once before. That's one way to compute support and resistance. In class, when we show you how to read a stock chart, we'll teach you how to compute these things. We'll teach you how to buy a stock when the odds are in your favor that it will continue to go up, and when the risk is relatively small compared to the potential reward. We would also teach you how to short a stock, again, when the risk is relatively small compared to the potential reward. I hope you'll be joining us. I hope you'll come back to the website to look at more videos in the future. Take care and have a great day.